In 2015, we were the first company who started hosting startups. IoT is a €1 trillion market. All these incubators and all these organizations, they invest approximately $500 million every year. Everything can collapse in a split second because you chose the wrong founder. So we invested in 17, 18 startups. Now we have like alive 12. So we're losing startups on the way for many reasons. So if there are in Cyprus, let's say 300 startups, okay, most probably one of them will after some years it will do an exit. Huh? Okay, or let's say every year you may have one, something like that. When you see this product actually, and you see all the companies that were successful in this sector, they were all startups that started from universities.
Welcome to the Financial Frontiers podcast. Remember to subscribe to our YouTube channel, hit that bell icon to get notified when we upload new content. Follow us on Spotify and give us a 5-star rating. It will help the channel, which I hope you love so much. Here we are, another episode of the Financial Frontiers podcast. My guest today is Dr. Panayiotis Philimis.
Philimis, yes.
The founder and CEO of CyRIC, Cyprus Research and Innovation Center, not to be confused with the government arm, the Research and Innovation Foundation. These are two different entities. And the founder of Gravity, which is an incubator, all related to tech, biotech, Internet of Things, AI. Dr. Panayiotis, I'm looking forward to this conversation. It's a domain and industry that I'm obviously very much interested in. We speak about tech and IT and, tech generally, the progress of things and how the world has changed in that front on a lot of my episodes, Thank you for your time. Please introduce yourself and let's get into a conversation over here about all the stuff that you know.
Yeah, thank you very much, Dino. Thank you for the invite. You said I'm the founder of CyRIC. We are a private company, and also the founder of Gravity Incubator, which is part also of our certification under the EBN certification, which is the European Business Innovation Center certifications. A little bit about me and about the company. Started the company in 2013, just a couple of months after the financial crisis.
What a timing.
Yes, exactly. And the aim was it was planned before actually, but somewhere in October 2012. And then the crisis happened, but I continue, let's say implementing my plan that I had in my mind, which was to bring R&D state-of-the-art results into the production and into global markets. That was simply the vision, that's it. So just to say a little bit also about how Gravity Incubator was created, it's just initially we were providing services mainly to European companies, innovation, SMEs, startups, tech companies in general, because the first team we were experts in developing from an idea to a prototype very fast on various engineering aspects. And from there, basically, I heard about the startups. We were participating in all the startup initiative back in 2014 in Cyprus was the startup coffee. In 2015, we were the first company who started hosting startups in our company. And in 2016, after, let's say, investigating the scene in Europe on acceleration incubation, we decided to do the incubator, and also we became certified by the EBN.
What's certified by EBN?
EBN is a European big network.
Okay.
Basically,
EBN, okay.
It consists of more than 170 members, 130 full members. They are similar like us, that they have incubators. But most of the techno parks, of the technology parks in Europe, they are part of this network. And actually it's beyond even Europe. So we have members also from outside Europe. It's very active, it's a huge network supporting in average 25,000 startups. There are hundreds of incubators linked with investors. All these incubators and all these organizations, they invest approximately $500 million every year.
Jeez.
Okay, so these numbers are actually requested from each organization. So each year we have to complete these 30 pages of report. Okay. So all this data are accumulated, and these are, let's say, the average results, the average impact that this network has.
Okay. So it's a recognized, let's call it part of the European Union.
Yes.
Okay.
Yes, it's in Brussels based, and their primary aim is to help startups or SMEs in business and innovation.
Okay.
So it's both.
Okay. And you've gotten the license or a permit, let's call it, for all of Europe or just for the jurisdiction, just Cyprus?
No, it's just for Cyprus. So it's a certification.
Okay.
You have to complete certain criteria.
Okay.
And among those criteria is to run an incubator. And basically we have all the levels of incubation, starting from pre-incubation, incubation, post-incubation. Tech startup needs a lot of years. So okay. It's a big process.
And do you have to meet some kind of targets in terms of do they give you funding? Is there
No. You said about the funding. Most of these organizations are funded by government. So we are one of the very, very, very few private ones, bigs, in whole Europe, and we are considered also as a reference private successful big.
Okay.
So usually, if there are, let's say, new members that are private, they usually speak with us to explain to them a little bit the business model behind it and how we work.
Big
is the Business Innovation Center. The label is called EU Big, European Big.
European Big. Okay.
Yes.
Big. Okay, and there's a lot to unpack there. So let's go back to CyRIC.
Yes.
So you're Dr. Panayiotis. Do you have a PhD in?
Yeah. I did my PhD in UMIST Manchester back into 1992. I did my bachelor, then I did my PhD. Mm-hmm. Then I worked at the universities, actually on patented technologies.
Okay.
So cool. I used to work with Japanese companies and develop actual products, actually.
Okay.
So we were developing. So from there, it was the first, let's say, interaction with the patents, with all these things about innovation. With my colleague, it was also a Cypriot at that time, then we became partners in a new venture when I came back to Cyprus. We even had a startup. So my PhD, I'm a mechanical engineer, primarily bachelor, but on my PhD, it was a lot of software. My PhD was 500,000 line codes of C++. Oh, wow. So I have also the IT, the software part.
Okay, that's cool. And what were you doing from, let's say, around 2000 until 2012?
2000, yes. As I said before, with a colleague that we worked
that startup.
We came at 2000 and we built a new venture. It was actually testing and calibration laboratories. It's testing of products. So if any company wants to verify or certify their products, you go to a testing house.
Okay.
And similarly with the instrumentation. So any instrumentation that is in the industry, almost any industry, any parameter you can imagine, temperature, pressure, force, mass, anything you can imagine that is part of the industry, from the butcher to the pharmaceutical company, you have your ISO, you need your calibration. We built the laboratories. And after that, we started R&D. Also, my colleague he was also a PhD. We were accredited by the Italian bodies. At that time, there was nothing in Cyprus or in Greece. So the two presidents of the two Italian bodies came to Cyprus for our certification. And we became certified, and then we had more than 800 customers. We were covering almost 100% in calibration of instrumentation in the factories, in the whole Cyprus. And then somewhere in 2007, we started, because of the big infrastructure we started also the R&D. So helping companies in Cyprus mainly automations in the industry when an industry needed to do an automation and there was no machine basically, so it has to build from scratch.
Yes.
So we need to design machine, and then we started also the R&D. So we started, let's say, building, let's say, our own portfolio of products.
Okay.
Yeah, that was the story of that
That's
venture.
so cool.
Yeah.
And then what's happened with that entity? Because then, obviously, in 2012, or is it?
Yes, at that time, my partners decided that they wanted to stick to the services and not to taking, let's say, new ideas into the market, which of course needed more investment, etc. So I left, basically, I exited from there, and I created CyRIC. So the decision was taken end of 2012. And I started the company in May 2013, which was 2 months after the financial crisis. Yes.
Yeah, but that's when you're sure about yourself and that entrepreneurial spirit is nothing will stop you. You just focus on what your goal is, and the outside parameters are just an obstacle.
Yes.
And you figure it out.
Yes, exactly. Yeah. I think the first venture was a very big experience. We had to deal not only with the, let's say, biggest companies, the biggest pharmaceutical companies. They were our customers, government departments, police, army. So we used to provide services at the highest level in the industry and in the government. And
are you talking before CyRIC?
Yes, before CyRIC. So this experience basically gave me also the strong will, let's say, to continue this entrepreneurial journey.
Of course. I mean, and also it's not easy what you managed to do, with your first partners. It sounds super complicated. And congrats.
Thank you.
So, let's see now CyRIC. You're obviously still in operation now, and that is the Research and Innovation Center. So unpack that for us. What is it exactly that you do? And obviously, technology has changed a lot, and a trend that everybody's speaking about now is obviously AI. AI existed back then, but I'm not sure that was maybe your main focus, as a vector in terms of tech. It sounds like you had a lot of knowledge around the biotech more, and maybe that's what started off. I'd like to hear the journey here. What was your initial kind of goals? How did that pan out? Some success stories. Let's start with that. And also maybe tell us how you navigated the challenge of the drought right after the haircut, because that 2 months after. The whole market shook. Everybody was super scared. Oh my God, I'm not investing in any money. I'm not doing anything over here, Start with that.
Yeah. Basically, before even 2013, like 2009, with the previous companies, we applied as in European calls. And at some moment, I realized that we were much better in terms of quality of preparing proposals and the technology part, I would say, than the people that they were inviting us to participate in these kind of projects. And then we decided to apply with our own ideas. And in 2009, I got the first coordination with our own ideas. It was actually had also AI. It was about agriculture. It was about automating pest traps, but with cameras. So catching the flies and identifying the flies as they get in, female. Even at that time in Europe was like super excited, working with the Agricultural Institute. So is that moment you realize that you have to take let's say, if you really want to build something, a new technology, you need to be the one who have to learn to write the proposal, have the certain partners, the partners that you needed, write the proposal, make the consortium yourselves, and drive everybody to work for that.
Right.
So I've discovered, let's say, this from the very beginning. So that's why I had that experience. So in 2013, we were focused to, we're applying on, I would say, in agri-food mainly, but also on the biotech part of the agri-food. So we won a few proposals as coordinators, and that continues until now. That CyRIC, it's the only, I would say, company that coordinates almost all the proposals, let's say half of our projects, its ideas and products that we want to develop. So we write our own proposals, we coordinate these proposals, and we pick, let's say, the partners that we want in order to build this product. So R&D, it's our core. That's why it has the name, research and innovation, because at the core of CyRIC, it's the R&D. It's very strong R&D. It's like any public research institute, but we have a very different vision, that we design products and we do research on things that will go in production.
Okay.
So our aim is always, what's the market? So we investigate the market more keenly. So before even writing a proposal, we are investigating the market. We're doing all the market analysis. It's like starting something like a startup. At the beginning, you have to do all the analysis, speak with the big players. Even at the first proposals that we won, we used to invite huge companies, billion-euro companies in Europe, that they were never wanted to get into a proposal, but we were convincing them, So that was very crucial, because always we were trying within these R&D projects to raise the level of the technology readiness level, as we call. And this is very important, because as you move on, the less money you need to go into the market.
Okay.
So the higher the technology readiness is, the less money you will spend, or let's say you will spend more money on the business development, marketing, and less on the let's say industrialization of the product.
Understood.
Okay.
So we'll get to Gravity, which is your incubator, and I guess these two organizations complement each other. But before I get to the incubator, just want to understand this a little bit more with the research. So do you kind of scout the market and try and figure out what opportunities lie ahead that the market perhaps didn't realize is needed in terms of innovation, and say, you know what, there's an opportunity over here in this specific industry, and we can improve this specific service or product, and here's our idea. Now we need, CEOs, investors, and whatever, look at this, we believe in this product. Or do you wait for people to come to you with ideas, or is it kind of a hybrid model? Do you wait for you, like if I think of an idea, because I'm on a specific domain, you obviously can't, well, not obviously, maybe you can, but I mean, have on tap, understand the depths of all these different industries that are related to tech. Are you relying on your own research on that, or are you open to people coming to you and saying, here's a new idea, and then you take it and kind of analyze that market?
That's a good question, yes. It's a mixture of things, actually. We live in a very small country, and we need to digest that it's a small country with limited resources. So we need basically, as a business innovation center helping startups and SMEs, we're adapting ourselves in all the different cases that are coming to us. So let me separate CyRIC from, let's say, the people that are coming to us either at the incubator or coming with ideas to help them for prototyping, etc. So CyRIC as a company, just to give you an idea, we started initially with biotech, then it came the IoT part. IoT is a €1 trillion market.
Internet of Things, for those who don't know.
Yeah. Yes, it's Internet of Things. By 2030, it's estimated to go at 3 trillion.
Jeez.
So we're talking about startups that usually you say, oh, my market is like 10 billion, 2 billion. We're talking about trillions. So we realized from the beginning, so we introduced into our R&D. And in 2020, we initiated, we launched at the beginning of 2020. Well, we prepared from before, and then the COVID happened. We initiated the sales in the global markets for IoT with our own products and services. That's just an example from R&D. we did the R&D, and then we created some products, and then we launched the products in Cyprus, Greece. Now we're in Europe. We're going to Middle East now, etc. So this is one example how internally a private R&D center or a private intensive SME that is intensively working to R&D. There is even let's say a statement about R&D intensive in SMEs. And the aim is to go with a product that you will go globally. So this is the journey, let's say, within our company as CyRIC. Now, there are the cases where people are coming with ideas. We had cases that we licensed technologies. Okay. We had cases that initially we were planning to license, and then finally they came as founders in Gravity. Okay. So we usually work for and invest a lot of money with no agreement, basically, because you're investigating, you're looking at the team, you're looking at the technology, and as you go along, saying, okay, this team is good for Gravity, let's say, it's a good founders, let's say. You're trying to see whether that technology, because you're talking about tech, is secured. Because at the end of the day, we are all investors. No? So as an incubator, one very big difference we have, even from the incubators in Europe, most of them are publicly funded. And usually the startups, they pay to get in. And if they don't pay initially, they have an agreement that we are their first investment, they will pay money. We actually invest money also, early stage, and we get equity. And we are like investors that they have to wait until there is an exit. And that means it's the same mindset that the next investor has, a VC, that usually the VCs, they will wait for the startups to have market traction, commitments, sales, and then invest, which is the biggest problem we face, not only in Cyprus, everywhere in Europe. What is the Death Valley? That the VCs, they are realizing that they need to de-risk, and the de-risk is by investing in mature startups. In Europe, you have the luxury to see 100 startups and pick the best one, which is the most mature. So all the rest are actually struggling. So this is another story. So we whatever it comes, we see it or we help them. Sometimes we tell them, look, you have to go to accelerators or collaborate with that. So we act also as advisors. So if there is founders that are coming that we cannot help them. So because at the end of the day, you need to match also with them, because they're going to be with us for years.
Yes.
So it's not like an acceleration that somebody comes in 6 months program, they come and they leave, you don't see them again, and then the next one comes in. So this is a very long journey, and it's, as we call, that's why we are called as venture builders.
Okay.
Even big VCs on tech, they have internally their venture studio in order to help the startups they have invested.
Right.
That's why a lot of funds in Europe, that usually there's only 2 or 3 or 4 partners, they realize when they start investing in early stage that it's too risky for them. And then on their next fund, they are shifting all their, let's say, priorities. And they say, oh, now we invest only in startups that they have traction. Traction, that means that a tech startup has spent a few million, has found from somewhere magically millions in order to bring their technology to the level that somebody can commit and says, oh, I'm going to buy your product. So it's really a very complicated, let's say, ecosystem when we talk about deep technology.
Of course. And something that is really interesting for me to understand your process in how you do this, because it's self-funded. And you got your research, your CyRIC arm, and then your incubator, and you just clarified that you don't have any funds from the government. And obviously my default thinking is, my assumption is, any director or CEO that's running a government-funded program is going to be more lax, more free in terms of decisions on which startups they're willing to fund. The risk there, it's not their own money, right? They've got a performance thing, but it's not the same. In your case, maybe it's not your money, but I mean, it's self-funded. So I'm imagining your risk threshold. You got to have risk, but the way you measure the risk and the way you kind of test any new idea or product that's going to be launched, I'm assuming is going to be quite solid in terms of how you do that. And so, there's books and different approaches. You want to test the market before you actually put the money down. Go with a prototype. These things that we've all read in books. I'd like to know, what is the process you follow before you say, yep, I've understood the risks, I feel confident, I'm putting my money down.
Yes, okay. Now let me clarify that though. One of the things, we have a small budget every year that we invest. What we do very well is we have built, let's say, a team that is supporting the startups to get funding either from Europe or the national funding agency, RIF, or European Horizon, to help them to get equity-free money. We're talking about tech, so the core of the tech company is to do R&D. That's why the Horizon budgets or the national budgets exist, in order to help startups and SMEs to get this R&D money and make their research in order to move a prototype, let's say, to a higher technological readiness level. And now Europe actually, in certain cases, now they realize their, let's say, gaps, which is they give money up to a certain TRL and then they leave it there. Now they realize that it's a problem and they have to add programs so that they give money also to take the product in the market. Okay, so we have a whole expert team, top experts in this field, in order to help the startups raise equity-free money from anywhere on R&D, because that's the main function of the startup when it enters an incubator. After you do all the business and you refine your product, then you have to dive to make a fantastic product that is really disrupting the market. So it's really building technology. So that's just to clarify that this is one part. So depending on the startup, there are cases that we don't give very little cash, to be honest. So that is very, very important. Yes. In our incubator, every single journey that we build for a startup, it's completely different from another one. So it's not a program like an acceleration program or an incubation program that is fixed. I want to take 10 health startups, I will give them 50,000 euro to make the prototype. Doesn't exist such a thing, So we invest in startups and founders, basically, that we believe they can build a company that will worth 100, 200 million and make an exit. And we need to make sure that the founders understand that this journey is very, very different from any other entrepreneurial journey of an SME. So I always, let's say, distinguish this by saying, if you have young companies that they want to build an innovative product, we call them innovative SMEs. If you are a startup and you are claiming that you're a startup, that means you know this journey that is 100 times more complicated and difficult than a standard SME journey. They are both trying to do something innovative. It's just the one, it has to continuously grow and raising investment. And that means in 5 years, they may be doing 10 million euro, while an SME that maybe have even better technology, in 5 years, they are doing 100,000 revenue. So it's the startup, it raises revenue. You have founders that are very talented, convincing investors, all these kind of things. So we have actually a process that not a lot of people know, that we say that in average, a startup to get into gravity, I will say 70% of the cases, it may take from 6 to 12 months. And we spend a lot of money when we establish that we like the founders, we believe that there is a substance, then we see their technology and we do the due diligence. In most of the cases, if this is a complicated technology, we may need even to go outside with collaborators to give us that input. If we find out that we cannot, let's say, if it's needed to have a patent, which is most of the cases, not all, then, and we realize that we cannot submit the patent because there is already something that has been patented, then we may choose to work with these founders on other ideas or pivot the ideas. So we had a few cases where we pivot the ideas on the same sector, of course, and expertise, because what is important, we are investing in founders that are very talented in their field, on the technology. At least one of them has to have this really high talent on tech. Also at CyRIC, we sometimes also jump in and develop things for them on technology. We try to balance that, not to do much, because we want the team to be able to do it. But if, let's say, you have a founder that has a certain technology that needs to do also software, and he doesn't have the team for software, then we may jump in and develop the software for them. Yeah. And we've been doing that because it's not easy in Cyprus, basically, to really build a startup and have the perfect founders. So we are jumping in actually to help in order to raise the prototype technology readiness level, the TRL as we call it, and have more chances to get the next investment.
Yeah, I mean, it makes sense, right? You're not going to ever find the perfect match ever. I think, to increase the chances of success, since you're in the game and you're at least involved in some level with the research, of course, if you've got the resources there and you've already, partnered with someone, it makes sense that you just, you do whatever you can to, or whatever you can, but I mean, you play your part to increase the chances of success. And what is interesting that, based on what you were saying, is you can correct me if I'm wrong, but it sounds like you focus not so much on the actual idea, but the actual people. Because you mentioned, if a founder comes through and you need to patent something and you see that there's already an existing patent, you're willing to pivot and change and do something else, but you like the founders and you want to. And I think that's how important would you say, idea versus people?
It's the people first, because everything can collapse in a split second because you chose the wrong founder. And you realize at some point that the founder really will not be able to convince all these investors that will be lining up to give their money. Right. So that is really important. I will say something that initially, because we didn't have also the top experience, initially our mindset was a little bit different. So we were looking at the people and the technology, I will say, equally. Now we see people, and then we see market and technology together.
Right.
There are also the exceptions, because sometimes also the experience gets in. But let's say that what we apply in most of the cases, that's how it changed for us also. So what I'm saying now that we're more focused on founders is because of the experience.
Of course.
So
as we know, in every success journey, there is what many people call failures. I don't call them failures, they're lessons. Are these lessons you've learned about the people?
Yes. Look, it's actually, sometimes I have my colleagues at CyRIC saying, why do we invest in startups? We are doing so wow technology at CyRIC. Why should we invest, in others? And one of the important things is, like, as we grew up now as a company, we're thinking now a little bit different, that even in some technologies that we are building, we can have startups now that we can collaborate together. It's like, as they call, corporate VCs, CVCs. When a company grows up and it has certain technologies, then it starts collaborating with them. in order to grow up their technological capacity, at some point. So it's quite interesting how it is. But definitely the change, let's say, on focusing on founders is important, because we're a very small country and there are not many founders that they have this maturity. All the blending of the passion, the talent, the stamina, the talent to attract other talents, which is really super important for a founder. So at the end of the day, to be honest, there are, after all these years, and even if you ask VCs, they make the perfect selection. They review 100 startups and they select one. And still, if you see their funnel, let's say there is a fund 30 million. They invest in 30 startups. Their exits in average, it would be only 4 or 5. All the rest are write-off.
Yeah.
At the time of selection, in the mind of the partners, it does all these 30, they are absolutely fantastic and they will make it. They are super founders, super technology, and still, with the support of the VCs, only 5 or 6, it's like 20, 25%. If a VC has in their funnel in 8 to 10 years exits to approximately 20, 25%, and that means they can make their money approximately times 2.5. That's it. That's the average, let's say, success of a VC. Now, if you look at us, that we are exactly on the previous stage, still investing, it's the same thing. So we invested in 17, 18 startups. Now we have like alive 12. So we're losing startups on the way for many reasons. It's because of the people, it's because of the technology, because of many things. But mostly it's the people, I would say. But I think it has to do also on the stage. So for us, it may be different from, let's say, of how these companies that they got VCs and they are on the next stage, what is the type of the failures, mostly from where it's coming.
Right. To be honest, I thought that the percentages of success rate is lower. 25% is much higher than what I anticipated.
Wait a minute.
Yes.
No, it's very, very small. No, you haven't heard what I said. When the funnel starts, is the selection of the 30 startups. Now, behind the 30, it's 1,000. From 1,000, only 5 has exited.
There we go.
From 1,000 startups, they selected 30.
Okay. I see.
Okay. From there, 5.
5, yeah.
So
that makes more sense.
So if there are in Cyprus, let's say 300 startups, most probably one of them
will
after some years it will do an exit. Or let's say every year you may have one, something like that.
Yes.
So it's just numbers that are there. There are good statistics to see it.
Yes.
So really this is it, 1 out of whatever, 40, 50. But if you see the 5 on 1,000, that's 200.
That's the percentage.
Yes, because they say that VC, usually that an early stage VC, they will select 1 out of 30, 1 out of 40, 1 out of 50. And then from there, 1 out of 4. So it's 4 times that.
Wow. Do you have any big success stories that you'd like to share?
Success stories.
Or some of these funds, some of these startups that have made it, that you're proud of.
Yeah, there are also surprises. Now we have startups that we are selecting also, we're able now to identify startups that are more mature, I would say. That means they are a little bit faster.
They've progressed to a certain point.
Yes, so we are, let's say, also able to identify these startups that are a bit mature. In Cyprus, not a lot. There are more, I would say, outside Cyprus that we can attract, of course, and bring them here. We have a few startups that are not Cypriot founders. Success stories, it's for me, it's like now we have startups that are producing. Okay, so we have like Capsule Skateboards that they are producing and selling worldwide skateboards. It was one of the first startups. We have now one in music, Octave, which is doing, it was like the last 2 years, although we have been working like 2 years before it entered the incubator. We went to US and we lived this dream of US, of America. We went to this big exhibition, NAM, about music. We presented device. YouTubers, whatever, musician. We were testing it. Everybody was like, impressed. We had only a booth of like 6 square meters out of a 200,000 square meters at that exhibition.
Jeez.
We got awards, etc. And now we started producing launching our first product, which is actually, it's a studio. It's a portable VST host, Windows 11, touchscreen. You can connect your guitar, your whatever instruments, and you can have studio quality in your hands in a little device.
Cool.
So yeah. So this is, let's say, a case where it was quite fast. I mean, when we presented to the let's say to the industry, immediately we saw that the feedback was like 90% were wowed with the product and the price. In other cases, you had like this exposure to expos. It's very, very important. We have now launching one other product in next October. It's coming from a professor of university from Frederic, Paris, from UFIA Tech. It's on buildings. Again, now he has now a team of 15 people. We are launching the product in 1 month. It's about smart readiness in buildings. And when you see this product actually, and you see all the companies that were successful in this sector, they were all startups that started from universities. Okay. So all these, let's say, software that is about buildings, etc. If you see the exits, like 100 million, 200 million, Revit, several software that were very successful. They were not software that came from the private sector. It was started from universities. So this is like a spin out from the university, but it came to Gravity in order to speed up its progress, and that's what we managed to do in 3 years actually. So, and for us, a success is when it launches product. This is a really big cycle.
Yes.
To have a startup passing all the stages and being able to launch a product usually takes a few million. In average, let's say it's something between 1 to 3 million. If it's a very deep tech, like you need a lot of clinical trials, so we have one that may need another. If it works on a specific, let's say, disease, it may need another 4 or 5 million in the clinical trials. But in general, depending on how big is the team, because we have startups, they are hardware and software, or only software like AI. So if you have a team that has a lot of software engineers, then the cost actually is less.
Okay.
So that's why sometimes software companies in generally, founders, they can, let's say, not need a lot of money and have very quickly something to test in the market. While in the hardware, it's much, much more difficult.
Sure.
So it's a mixture, but in generally, you need all this, an average 2 million for a startup to get to the level they are ready to present to a customer and get their first commitment. That's approximately the average we have, let's say, on the startups we work, which are mainly medical diagnostics, medical AI health, advanced materials, consumer products, software. Yeah, so it's between there, basically.
I have to ask about AI and where you see AI and how it's shaping our future. Are you investing in any AI? And generally, give us your opinion on AI.
Yes, of course. AI now, it's in everything. Even in our startups, we have a fitness in AI. Even the medical ones, because when you get images, again, the processing of image, it's AI. Yeah. So let's say in at least half of the startups we have, there is the AI element. In some cases smaller, in some cases higher. Also in our company, CyRIC, we have AI in all the sectors. So we have in biotech, a little bit less, it's only just processing the data. So I would say it's more machine learning rather than AI. Then you have in the IoT again, which is machine learning, so we get a lot of data. But there are cases where you use the AI algorithms in order to improve, let's say, the accuracy. So we have it also. And then in the robotics and the drones that we do, the AI, it's everywhere. It's on the image analysis. Sure. It's now on the autonomy. If you heard this lecture about autonomous systems, we're talking about robots. Robots means either ground robots or drones. Again, it's part of the sector of robots. That is the autonomy part, which is basically you need AI algorithms in order to manage all this data and, let's say, send a robot to get into a cave by itself, navigate, etc.
Self-driving vehicles.
Yes, it's everything. Anything about robotics, it has actually the AI embedded there. AI a lot in health and medical, I would say there is quite strong, in the most strong cases that we know from our experience. It's everywhere. It's just in certain cases, the level of AI, it's 100%. And then in other cases, it's really only on certain models, let's say.
I think, businesses need to embrace it properly. And I mean, you mentioned music. It's everywhere. So you mentioned music. And apparently, I was watching this on one of Joe Rogan's latest podcasts where he played a song that was generated 100% by AI with the vocals and the music, and took a song from 50 Cent and they converted it into a 1930s jazz, and it was really good, really good. So, I mean, just in music, it could change things, for definitely is already. When I was thinking about AI, and a question that I wanted to ask you, I had a couple of questions actually, where you mentioned Internet of Things, and you said that it's $1 trillion market. Let's pin that, because I want to ask you about that. But just a small, what I want to tell you about AI. In your line of business, and specifically around funding, right, and picking the right startup out of those 1,000 that you mentioned, that whole process until you get to that final 4 or 5 that are successful, that is currently 100% handled by humans. That data processing and picking who are the 30 that eventually become that's humans right now. Yes. That sector is going to change. AI is going to change it.
Yes. Definitely. It's used actually now on the, when you are doing the deal flow and you are searching for startups, AI can help you sort them out. You can ask it a lot of questions and then you can rank them, because really it takes a lot of time to just even have your deal flow manager that will go through all the startups, let's say 300 per year, half an hour.
Yes.
Just imagine that you need, and then process that data. Yes. Just only the half hour, and then how you choose them. You see them the first time, there's this 300, you cut off, let's say, the 150, and then you see the 100 second meeting, third meeting, fourth meeting, until you come up with the startups that you will present to the partners. So it's a whole process. So the human is involved because there is the thing about the founders. You need to understand the founders, their characteristics.
And then again you're basing it off of data. So you as a human are you're speaking to the person, you're understanding you're getting data, you're getting signals, exactly. Looking at their body language, you're looking at the way they respond, their level of knowledge, what they've done in the past, whatever. There's data you're collecting as a human.
Exactly, yes.
And when we get to the point where that data can be somehow interpreted by AI, it's going to cross-check that across a much bigger database than what every founder or investor has it in their own mind.
Yes. At this moment, AI is helping you to do the deal flow.
Sure.
And as we move on, I believe that percentage will increase slowly.
Sure.
Because then you can do specific tests, specific questions. I think, it may intervene, let's say 50 or 60%,
right.
But you cannot take out the human factor.
Right. Here's a question. I'm moving way into the future. Let's say in 200-300 years, right? Where we've got AI to the point where it just doesn't fail. 1,000 startups, and you just kind of rely on it. And you say, out of these 1,000, for these 999, there is a success path, and that is exactly the way that you should do it. These founders don't work, whatever. This one out of the 1,000 is not going to make it. All these 999 are going to be successful, 100% guaranteed. Let's say we get to that point. what does the world look like after that?
No, well, okay, let's say not after 300. Let's talk about after 5 years. Okay, if let's say there is a startup that made this AI algorithm specifically for the deal flow, we don't need to wait 200 years. It's going to be after a few years.
Interesting.
So it can help you there, but at the end of the day, because there are dynamics in the market, okay? So if everything is not perfect, because after 200 years, I may imagine something else, but in 5 years, I can say that AI can help at a very high percentage. It can't pick all the things, but the dynamics of the market, whether something happened and that market collapsed, everything just right off.
Yeah.
So there is the dynamics of the market. And then there is the dynamics of the founders. If one of the founders, let's say, for some reason leaves, and he's the one that it was the mastermind behind the tech, then still the startup may continue, but this momentum of developing new products, the VCs will start going, let's say, okay, so let's sell it now because it will not go where we imagine it will go. Right. Because you are helping to build the startup to get a high valuation so that the investors can get a good exit because at the end of the day, this funnel, you invest this money and then you are relying on just a few startups that you will make times 10, times 20 in order to come up with the average of times 2, times 2.5.
Right.
Okay. Right. So just simple maths. Right. So the human factor, the dynamics, let's say, of the market are affecting, all these perfect decisions that your AI has helped you. And I agree that AI can really help you a lot.
Yeah,
and it can make less mistakes, I believe, because you can use even the AI to monitor the startups. So as you give the money to the startups, this AI can monitor all their actions. It can give you flags. It can help you also on monitoring,
to prevent the failure.
Yes. Or at least, as an investor, from early, they're not doing well here. I should help them. That's sometimes there are failures because VCs are not able to help their startups, especially early stage. That's why VCs are always moving. They start at early stage and they move immediately to the next stage. So there is this gap there, which are like the angels.
Right.
Whatever that they're investing and all this gap that we are mentioning there.
So, Internet of Things. This was a trend. I mean, I looked at this many, many years ago. You're obviously more involved in it, and it continues. You didn't stay just in the trend. You actually invested, and you obviously know a bit more. And I'll just tell you what I know about Internet of Things, and then it's interesting. And then you can maybe expand on some of the examples that you're already working on. So, like a fridge, for example, and the data that it can give you about its temperature and the status of the food, or in agriculture where you've got the
soil moisture,
whatever
you
it
when
is,
to water,
whatever it's drying, whatever there's a crop, all of the stuff. Am I on the money there? Tell us about Internet of Things. I think it is an interesting topic.
Internet of Things is horizontal in all the industries. So anything that you want to monitor or control, you can have a sensor, give you that number, upload it on the cloud. So you have also the communication part, either this is terrestrial or satellite, whatever. And this data goes to the cloud, and there you can have, if it needs to do processing, say it does the process automatically, and then the user has his mobile app taking the warnings. Your fridge night went 10 degrees, it should have been minus 20.
Yes.
There is food there that's worth €1 million. Yes. So you have to go and solve the problem of the compressor that failed in that room. There are many things. There are, let's say, things you want to monitor something in the middle of the sea. Whatever, I don't know. You can place sensors in buoys. You can have sensors in drones. Or anything that is sensing you want to collect. This is what we call the Internet of Things. In buildings, everything's about sensors. So, in order to improve, for example, we have a startup working on the smartness of buildings. If you don't have the data. Having the data in real time, you can actually see, if everything is controlled properly, how you can, let's say, make it more comfortable, how you can save energy. So all these sensors are helping you in the production. Everything is sensing. In critical infrastructure, you need to sense, smell things. If there is a gas leakage, it's everywhere. Pick any industry you like. You are transporting one container with some critical things, and you need to know that the temperature inside hasn't raised because you have, let's say, medicine. It's everything. You may have even cameras detecting events. Security. Somebody, it's everything about sensors. It's everywhere. Cars. The cars, you have the sensors on the car, but then imagine what information you can get from sensors around you.
Yes, so not to be reliant only on the cameras of the vehicle, but actually get a validation. A basic example is a vehicle is approaching a traffic light, and by imagery it's able to identify that the traffic light is red. But if it gets a validation from a signal that's built into the traffic light and says, yeah, I am actually red.
But they may also put a wire underneath the road, and they measure, for example, statistics on they know, for example, in that road, today there were 10,000 cars passed, not even a camera, very cheap, just a fiber that can tell you that, 10% of them, they pass the speed limit. So it can be it can be a passive sensor, it can be, a sensor that gives you feedback in real time. So it's everywhere, basically.
So I was just trying to understand, why is it $1 trillion market? Well, it's because in the Internet of Things, it's not only code. It is also an infrastructure industry where these sensors cost money. Companies, businesses, countries need to produce this stuff, and then they need to be laid. And so there's expertise that lays these things out, that implements it in installation and all of this.
Imagine water sensor. You need in every house one smart water sensor, and this goes in the cloud, and you get the warning that whatever you can have in real time your water consumption, or
the quality of the water, and
the quality of the water, the energy expenditure. That is super important. Every industry would like to know where my energy, especially if you have complicated equipment, how I spend my energy, where it's gone. Why I'm paying like 10,000 euros.
Of course, it could be some kind of faulty compressor on an air conditioner that's consuming. You don't know.
You can change equipment. You can improve things. So that's why it's everywhere. Internet of Things.
Technology. I love it so much. Panayiotis, we've been speaking here for over an hour. Is there something that maybe you feel I should have covered that I should have asked you around technology or your businesses?
No, it's at CyRIC now, as we grow up as a company, we look, I will say, outside Cyprus, and that's what we are also trying to provide that, let's say, vision to the startups, that even from the very first beginning, when you have an idea or you want to test something, you have to go out and test it, go to the exhibition, where is your potential customers. Don't wait until you do the product fully and then go to present it. You have to be there, you have to travel. You have to see where you are more, let's say, appreciated. Appreciate your product, your services. That is very important. For example, if I go to Germany and I show something that I did, they may not be interested. But if I go to, let's say, to Egypt, they will be super interested to collaborate because they don't have that kind of technology. So we see also a side of how we can expand, place ourselves in other continents, producing high-tech products also where it's needed, and not just because producing something here and then sending it somewhere else. It's the whole process. While producing that in the country where they need it, it's even much better.
And on that point, I was going to bring you a perspective that I have on that is, I think one of the advantages we have as Cyprus is being a small island. We've got a little bit of everything, and I really feel that we could view ourselves as the testing bed for a smaller scale startup that can test a product in production, like in the actual market, before it is actually pushed out on a global scale, if that's the vision. I guess it doesn't apply in every case, because you did mention now something that's quite important. You might be producing something that caters mainly for, this jurisdiction, but then you need to make some adjustments. So I guess, having that mindset, we're using the country just as a testing bed because it's small and we're able to access, things easier, right?
The R&D, you can see now many, because we have the IP box now, that's why you see also many European companies coming to Cyprus to do their R&D here and produce their IP because they pay only this 2.5% taxation. So this is very important that R&D, you can do it anywhere. So we can do really the R&D here in Cyprus. We can do the first production. In fact, actually, in our new premises in Ergatis industrial area, where we have the new premise of CyRIC, we're also now building new premises for startups to produce. So we're building production facilities for startups. So
they come in and they don't need to find a place, just start.
Yeah, so now we are actually building that part where at least the first production. Why? Because we want to phase the first production. We need to be sure that it's done successfully, and then of course they can move on to different countries. But it always depends on the case, because sometimes if you have investors that they want you to go to another country, to US, to Germany, then you have to go there. So you have to be open on that. But we see that for some of our startups is needed, and we said, okay, why don't we have it next to us so we can help the startups also let's say, solve any initial problems they have in the production. And if you're talking about high tech, sometimes it's not straightforward. It's complicated.
Good. So let the audience know where they can find you. Panayiotis, thank you for your time. Let them know where they can find you, and some closing comments.
Yes, thank you very much. Yes, it's www.cyric.eu is the website.
CyRIC, CYRIC.eu.
They can send an email to info and will be distributed from there to the right department. So we get inquiries from people that they have new ideas, startups, collaborations. They can see really also from the website what we do. So we can also collaborate with other companies, providing even white label certain things and help some of the companies to grow faster. Thank you very much, Dino, for the invite.
Thank you, Panayiotis. This was a nice conversation. I wish you all the success in the future.
Thank you.
You're contributing to the island. You're contributing to humanity. Thank you.
Thank you very much. Thank you.
That's a wrap.